This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association. Your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Mark Magnuson.
Hello and welcome into Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today is Monday, November 20th, 2023, and we're so glad you can join us for today's episode. Now, as you can see, we are back from Kansas City, and we have a full episode for you today. In today's show, I will be joined by Josh Linville with StoneX. We will get the full update on the worldwide fertilizer situation. Also, we will have a check of the ag weather outlook, but first, let's take a look at the closing markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
At the end of another trading day, joined now by Robin Schmahl of agmarket.net for our closing market analysis. Robin, after the weekend, what did we see take place in the grains today?
Well, we had a banner day in soybeans. Took a little bit for it to really get going from the overnight trade, but a strong close, moving probably on the Brazilian news. Brazilian planting pace is 68%. They only increased 7% over the week. Last year they were at 80% complete. So what's happening now is that Mato Grosso, which is a large soybean area, the farmers there are now struggling with the idea of, do we do some replanting? Do we leave the crop as is and see what grows? Or maybe abandoning it and leaving it until first part of the year in order to plant their second crop? And I don't understand exactly what the ramifications of planting a little bit later now or waiting till second crop. Probably has to do with something with weather, whatever. But that's what they're struggling with right now. Some are looking to plant cotton too because of the dryness, which would expand some of that production. So rains over the weekend were spottier, not quite so much as was earlier predicted. So those things working together just got the traders a little bit excited. The export inspections weren't that great. We had 59.1 million bushels. That was down 12.1 million bushels from last week. Corn export sales were at 21.8 million bushels, down 6 million from last week. And wheat were at 13.2%, not percent, million bushels, up 5 million from last week. But there were some daily sales of corn of 104,000 metric tons, and that's to Mexico. Mexico continues to be a strong buyer. But one of the other side that's a little bit more bearish and bullish, you want to throw that into the mix a little bit on the soybeans because they were strong today. There was the Brazilian aspect behind it, was China's purchases during the month of October of soybeans from the U.S. are 228,264 metric tons. Now, last year, purchases in October were 772,787 metric tons. So a vast difference as they turned more to South America for their soybean purchases. However, with some of the crop concerns in Brazil, recently China has stepped up and purchased and booked quite a bit of soybeans, over the last 2 weeks or so. So they're stepping up a little bit. Of course, there was an agreement signed earlier about how much they would buy of goods, but I don't think that probably translated into it as much as the concern over what is going to be produced or when it's going to be able to get good access to South American soybeans. So that was kind of a bullish and bearish type of scenario coming through there. Now, on the other side, that's not directly related to that, more to Argentina, as they elected Javier Milei as president, which are pretty much right-wing president. he's going to make some sweeping changes, and part of that sweeping change could be in the export of grain. Now, their main Argentina's main exporter of corn and to the world, and they're facing their worst economic situation in 2 decades. So that may come into play, but what it's going to do is going to leave the whole traders of the agricultural commodities kind of on edge. What's going to happen? What are they going to be doing? How much is that going to maybe impact U.S. exports? So it's just something that the financial world markets, the U.S. is looking at as far as what could be coming out of that after he takes office in December. Now, wheat keeps taking a beating here. The hard red winter wheat, new contract low again today. The soft red winter wheat, Chicago wheat, basically scraping along the bottom. There's just nothing there to really get it excited. Crop conditions of what's being planted is fairly good. So we're seeing a real dynamic between primarily soybeans and wheat. Corn's kind of holding around in between there. So just kind of going to be some excitement here prior to the Thanksgiving holiday.
A lot of world stories taking place in the grains. But Robin, let's switch over to the other side of the ag marketplace and the livestock complex. What did we see there?
Yeah, livestock, cattle faded the opening. Cattle on feed report was much anticipated, came out on Friday afternoon. Really, it was neutral to a friendly report. The on feed number on November 1st that was released at 101.7%. The average estimate was 101.9, so pretty much neutral there. But the cattle on feed numbers marks the fourth highest on record since 2021, 06, 2020. So it's the 4th highest on record, but it was neutral as far as numbers were concerned. The marketings were a little bit lower than the trade estimate at 97.5%. They were estimating 98%. The big thing that was creating a lot of angst in the market was the placement number. Trade was estimating 106.1%, actually came at 103.8%. So that is lower, and that's what really got it started this morning, because a trade always trades where it falls according to the estimates. It doesn't make any difference if the estimates are higher or the actual is higher than a year ago, which it was, which is showing there's going to be more available down the road here that's been put on feed. And that was clearly shown as the market opened up higher, moved higher. As the day progressed, the markets just fell back. So they lost a lot of that initial support that they found from buying off of that report. Really, we have to look at the cattle on feed report and take it in the context of everything else that's going on. We've been struggling a little with the boxed beef. So we've been struggling a little bit with that, but cash cattle last week were $2 to $4 lower, depending on the area, whether they were dressed or lives. So that didn't help a whole lot. We're anticipating early cash trade this week to get ahead of the Thanksgiving holiday. Really not any indications of bidder offers out there yet at this point in time. Boxed beef, though, today is higher in both categories. We've got choice up $2.28 and select up $1.71. Hogs, futures tried to rally, couldn't rally. They came back down under pressure, closing lower. Cash was unreported today again due to packer confidentiality. That seems to be a standard now for Monday over the last number of weeks, where we couldn't get cash reported earlier in the day and had to wait till the close. Now, cash was down quite a bit on Friday. So I don't think packers are going to be very aggressive this week, but they want to buy earlier, so they could bid up a little bit today, just trying to get some stuff done ahead of the weekend or the Thanksgiving weekend, longer weekend. Now, pork cutouts showed some nice strength in the morning report, up 279. They were up significantly on Friday as well. Friday, the main drivers were the picnic cuts and the bellies. Today, we're seeing some more strength again. That's a good thing to see, but we have to see more consistency there, or this market could face struggling some more and actually falling below the sideways pattern that it's been in for the last couple of weeks. So we could look at the market and say it's either building support or building resistance, but we have to see that support from the underlying cash.
Robin, lots of great information as always here from the closing market report, but how can our viewers get in touch for more marketing information?
They can call me directly if they'd like at 877-256-3253 or go to our website, agmarket.net. The 844 number is there. Feel free to call in and somebody will help you.
And that's the great thing. You can get right in touch with Robin or one of the team at agmarket.net. Robin, thank you so much for the time here today and have a great start to your week.
All right. Thank you and have a great Thanksgiving.
Thank you to Robin Schmahl of agmarket.net for our closing market analysis. It's time now for the closing numbers, courtesy of the folks at Bar Chart. December corn up 2.5 at 469.5. January soybeans up 27 even at 1367.25. December soybean meal up $6.90 at 460.20. December soybean oil up $1.10 at 53.11. Chicago wheat down 7.25 at 543.5. Kansas City hard red wheat down 7.5 at 610.5. And Minneapolis wheat down 8.25 at 707.25. December oats up 2.25 at 347.25. On the Merc, December live cattle down 27 cents at 175.47. January feeder cattle up $1.35 at 229.85. December lean hogs down 62 cents at 70.35. December pork cutout down 17 cents at 81.27. And Class 3 milk down 25 cents at 16.39. And that does it for our closing market coverage here today on Ag Matters PM. It's time now to take a break to hear from our sponsor, the Iowa Soybean Association, and the Soybean Checkoff. And when we come back, I will be joined by StoneX's Josh Linville. He is the Vice President of Fertilizer at StoneX, going to tell us all about the worldwide fertilizer situation and whether or not it's affordable right now.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
You're watching Ag Matters PM on the Iowa Agribusiness Radio Network. In today's show, I'm joined by Josh Linville, the Vice President of Fertilizer with StoneX. Mark Magnuson for the Iowa Agribusiness Radio Network, and I'm joined today by Josh Linville. He is the Vice President of Fertilizer with StoneX. And Josh, we've had a lot of interesting developments in the world of fertilizer here very recently. Let's start off with the situation for the countervailing duties coming from that phosphate from overseas. Could you explain the whole process maybe for those who aren't that well versed in it?
Yeah, let's back up to summer of 2020. Phosphate values were at very, very low levels. North American manufacturers were having to curtail production because it was literally at or below their cost of production. And they were looking for protection. When you look at it, the U.S. government imposes pretty strict regulations as far as what they can do, what they have to do after the mines are done, things like that. Other countries around the world don't have those same restrictions, and so they're looking for help. Ultimately, we put countervailing duty rates against Russia and Morocco. Now, they have been fighting it ever since then, and we finally saw a breakthrough here in the last few weeks. Unfortunately, Russian product has continued to come to the U.S. market. There was a Fosagro company based there. Their rate was about 9%. They were willing to pay that rate and continue to come here. They just changed that rate. They moved from 9% to the upper 20 percentile. So unfortunately, that should effectively cut them out of the marketplace. On the fortunate side, the win side of the situation is Morocco was set at 20%. They moved them all the way down to 2.12%. That was a huge win. Everybody got very excited, like, oh, prices are going to tank, supplies are going to come here. We're in very good shape. Unfortunately, we kind of had to take a step back and say, calm down. That's probably not the case. The Chinese government has recently imposed restrictions on exporting phosphate. And they're the global leader as far as exports go on a normal basis. And Morocco doesn't want to pay anything for a duty. So if China is no longer there exporting, they've got plenty of demand around the world they can continue to go to. They're going to sit there and say, yeah, thanks for getting it to 2.12%. If you'll drop it another 2.12%, we'll come. So we don't think they're going to come because they start flooding the market, that their argument just doesn't hold water anymore. So we don't think that they're coming. We think that we lost Russia. Things probably stay tight on an S&D perspective through next spring at least. There are still challenges against the duty rate. They might come to some sort of fruition come February, March. We've got to wait and see.
And the other part of that I didn't quite understand with the Moroccan situation is that we were expecting, some type of a change in the duties, but we thought it was going to take a little bit of a longer time period. And all of a sudden we had a decision just like that. It switched on a dime. How did that happen?
Yeah, that's the problem. There are so many different challenges going on to this thing that everybody's getting everything mixed up. And truth be told, I can't sit there and say that I'm an expert in it. This stuff starts getting into legal speak I can't even begin to comprehend. But the changes that were just made, Morocco was originally, it was suggested to move them from a 20% down to 15%. The Fosagro Russian company, they said moving from 9% to 50, I think it was 53%. Well, they only moved them up to like 26.5, but it was enough to make the change. The Morocco thing to 2.12 was a major surprise. These other challenges that people are talking about taking longer, these are the ones where people are saying the duty rate in general is unfounded. There is no need for them. This is the round that we don't think we're going to get the answer until February, March.
Josh, unfortunately, when we have turmoil in the world, especially when it comes to conflict, it usually ends up affecting the fertilizer market, it seems like, in some way, and that's currently happening now in Israel, isn't it?
Yes, it is. And there's a lot of direct impacts. There's a lot of indirect impacts. From the potash market, Israel is the fourth largest exporter of potash in the world. And of course, it doesn't touch on the humanitarian situation, right? I'm a fertilizer guy, so that's what we focus on. We watch that very, very closely. Now, there has been no attacks on that operation. The supplies have continued to roll. They haven't had to slow down whatsoever. But we're watching, it takes one rocket in the wrong place, and all of a sudden that whole storyline changes. So we're watching that very closely. Indirectly, we have seen energy prices go up, which of course means nitrogen prices have to go up with it. We are watching countries like Turkey and Syria and mostly Iran. People don't understand the number of tons of nitrogen that flow through that Persian Gulf. Now, if all of a sudden Iran starts to enter the mix and we start to go against them, everybody will talk about oil shipment. That will be the news story. But we cannot say enough about how many tons like urea move through that corridor. They will be just as impacted as every oil ship that moves through there. So a lot of indirect stuff, a lot of direct stuff. Fortunately, we haven't seen the steps towards that, but every single morning I wake up and it's the very first thing I check. I pull up the news agency to see, did Iran or somebody else do something, and does that change our outlook?
And unfortunately, Josh, the last time we talked, we were talking about the impacts of the Russian and Ukrainian conflict on fertilizer. Has that situation at least improved?
Obviously, Russia is still in Ukraine. That still keeps us wary that something could change, but Russian exports have continued for fertilizer. That is one sector that hasn't largely been touched. Now, countries like Canada and Australia put sanctions on their fertilizer, but most of the rest of the world said, nope, we're going to keep bringing that product. So that was a very big fear back in March, April of 2022. That was unfounded. Fortunately, they've continued to come. We're watching it very closely. It's on the list of low probability, high impact situations we're watching.
Josh Linville, Vice President of Fertilizer with StoneX. Josh, is there anything you'd like to let our audience in Iowa know about when it comes to anything else that you're keeping an eye on and tracking?
We need to continue to watch everything around the world. Things halfway around the world can absolutely affect you. I don't care if you're the smallest or the biggest person in Iowa. It will have an impact. But don't forget about the home factor. We have to keep eyes on our home area. Logistics, very big thing. The river system is continuing to struggle with water flows. If that thing shuts down again and gets very low, our rates go up. You could see me talking about New Orleans, Louisiana values dropping by $20, but you could also see your local price go up 10 if that logistical chain gets stressed. So continue having those conversations with your supplier, with your retailer. Don't look at that as adversarial. There's a lot of risk still in this marketplace. There's still a lot of volatility. The more conversations, the better suited we'll be to get through this next fall and next spring.
And I'm going to ask you to dumb it down for me specifically, Josh. Right now, our current situation, you're going to buy some fertilizer or line some up. Situation good, bad, or ugly?
Much, much better than spring of 22. Still not quite as low as we'd like on some of these values. Phosphate values are still on the high side. Potash looks very good. Urea looks like it's getting down to a level it should start bottoming out. Anhydrous is on the high side now, but a lot of the fall stuff is already locked up, and we don't have spring programs yet. UAN is well priced, and we haven't seen that price move in several weeks. Best thing I can say is if you look at your inputs and you say, I like these values, consider selling some grain against it to make sure you lock up the value. If you can call the low of the fertilizer and the high of the grain market every single time, good work. But most of the time, that's pretty tough to do, so we can lock in the value. That's where we want to be.
They always say that the easy part of farming is the farming, the hard part's the marketing, so that makes a lot of sense. Thanks so much, Josh Linville with StoneX, and have a great rest of the Trade Talk Show.
All right, thank you, sir.
A lot of great information there from Josh Linville with StoneX, and it is time now for the Ag Weather Outlook. A lot of rain in the forecast today, although it hasn't necessarily materialized in all areas of the state. In fact, here in central Iowa, we did have some rain in the forecast as well. but it never really showed up. Did have some instances of sprinkles here in Des Moines. But again, widespread rain chances around the state of Iowa today. As we look to tonight, those rain chances will continue with a lot of cloud cover, and then tomorrow, those clouds will decrease somewhat, and it will start to get a little bit windy and breezy around the state. So let's turn our attention now to the National Weather Service and what's in store for the next 24 hours. As you can see from the National Weather Service, widespread rain chances today with a high temperature range 46 to 49. Mostly cloudy with rain chances continuing throughout the overnight hours tonight, 34 to 38 the lows. Tomorrow, decreasing clouds and breezy with highs expected 42 to 48. And now taking a look at our affiliate weather map for tomorrow, Cherokee decreasing clouds and breezy, high around 42. Shenandoah mostly sunny and breezy, high of 47. Des Moines decreasing clouds and windy on Tuesday, high around 46. Albia decreasing clouds and breezy, high of 47. Waterloo partly sunny and breezy, high around 45. And Clinton rain likely, then slight chances for rain and breezy, and a high around 48. For a more detailed forecast in your part of the state, make sure and check with your local Iowa Agribusiness Radio Network affiliate. And that's going to do it for our Ag Weather Outlook. That also brings us to the end of this episode of Ag Matters PM. You can find all of our content on our website at iowaagnet.com. You can also follow us on social media on Facebook, X, LinkedIn, and TikTok. And don't forget our free twice daily market podcast, which can be found on Apple, Amazon, Google, Spotify, and Podbean. And also all of our video content, which is found on YouTube. While you're there, don't forget to subscribe. Click on the notification icon as well. That will let you know whenever we have any new videos for you. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Mark Magnuson. For Riley Smith, Dustin Huffman, and Andy Peterson, we thank you for watching. This has been Ag Matters PM.